Welcome back to Dynamo DeFi. My name is Patrick, and today I'm interviewing on the channel Artur Schaback. Artur is a co-founder of Paxful, one of the leading peer-to-peer marketplaces for Bitcoin, and he's also a co-founder of Clip Finance. Clip is an upcoming application on the Binance Smart Chain that will automate and optimize yield strategies for stablecoins and other types of delta-neutral farming. And before I go any further, I want to give a couple quick disclosures. The first is that although this is not a promoted video, I am advising Clip on their yield farming strategies, so I do have an affiliation with the project. Although most of what we talked about in the interview actually ended up being Artur's time at Paxful and his thoughts on Bitcoin payments. Second thing I want to remind you of is that although we'll talk about a number of digital assets in this video, nothing we say is an endorsement to buy them. You should still do your own research, of which this interview can be an important part. With that being said, let's get into it. Welcome to the show, Artur Schaback, the co-founder of Paxful and now co-founder of Clip Finance, a new DeFi project.
Hey, Patrick, what's up? Exactly. So I founded Paxful back in 2015 with my co-founder and got into crypto in 2013. So it's been 9 years, and boy, this has changed a lot. And that's the reason it's not just Paxful for me anymore. There's other stuff too. Because back then, Bitcoin and crypto was a lot simpler. It was about the payments. That's what Paxful is all about now. Still, payment rails in Bitcoin and on Lightning Network. Basically, Paxful is a P2P marketplace where you have one form of money and you can exchange with anybody else for other form of money. So if you, Patrick, have money in PayPal account, I have Bitcoin, we can meet on Paxful, and you can buy Bitcoin from me for PayPal, because you can buy directly. You cannot buy directly with PayPal Bitcoin, but because we're the marketplace, we connect people. You can do this in a P2P style. So Paxful has like over 13 million users registered and does about $40 million in volume. And the most user base is from global south developing world, because the banking system there is slow and not many people are banked, and Bitcoin is really useful there for the commerce, for the faster payments and everything like that. So maybe it's hard for us to understand, but if you want to make a payment from South Africa to Kenya with a traditional way, it would take you 3 business days, because you have to use the payment networks of South Africa and Kenya. They don't talk to each other, so you use Swift. It's expensive. It costs $30. So with Bitcoin, you can buy Bitcoin in South Africa with FNB wallet on Paxful. FNB is like a local version of PayPal, and then sell that Bitcoin in Kenya for M-Pesa wallet. So M-Pesa is like one of the most popular wallet there. 96% of households have M-Pesa in Kenya, and only like 50% of households have bank accounts there. So the mobile wallets are more popular. So this was for me a big surprise, but because we made this open-ended marketplace, Paxful, like 7 years ago already, that these people figured out themselves the use cases, because it's open-ended. It supports many payment methods, like 300. So yeah, maybe it's not like really the DeFi itself. It solves not this DeFi more complex financial instruments problems, but it solves the payments problems for people. So I'm super excited that we've built this and people are using that. They find it useful, and it really improves lives of everyday people, helps them do finances better, faster. Basically, that's pretty much it. Yeah.
Cool. Yeah, I always say that payments is the most important thing before we get to truly decentralized finance, because if you can't off-ramp your money and can't spend it, then it doesn't really matter as much. So if I'm correct, you grew up in Estonia?
Yeah, I grew up in Estonia. I moved to US back in 2014, and then Yeah, I met my co-founder and we started business. We started building together Paxful. The idea was always to help the little guy, which we still do, because Paxful is being used again by just like simple people like us, not like big companies, corporations, because they have other ways to use. So that's been the idea so far. Yeah. And now I'm, because of the work, yeah, like between US, Estonia, we have an offices in Estonia, in US, in Dubai, in Philippines. So the team is quite huge now, like 300-400 people.
Wow. Wow. I did not know that. So what inspired you guys to start it? Was it helping the little guy, or was there some problem at the time? I know the Bitcoin crypto space has changed a lot since you first started this.
Right. So like I came into the crypto Bitcoin space because of the price. 2013, like, wow, it's growing to 200 and then to 70. So the speculation aspect that gets people interested. I guess you can find the parallels now here as well. Maybe many people get into meme coins first. They go for the price for speculation, and then they stay for the technology, for the ideology, basically. And that's what, because I'm a tech guy, right? I was a software developer, and so the technology behind Bitcoin fascinated me. So it's not something that over marketed, and no, it's actually under marketed, and it's fascinating that you can build on top. You actually solve the real problem. So that's what got me into Bitcoin. And then I always wanted to build something on Bitcoin, because it's a, again, new platform. Just like in 2006-7, when the mobile apps time came, you had this opportunity to build apps on mobile, and now you had this opportunity to build apps on Bitcoin back 2014, and now you have this opportunity to build apps in DeFi. So, and that's what got me, fascinated. And then the reason we built Paxful was that we were on a competitor website selling Bitcoin with a profit, like for PayPal, for like Western Union, for gift cards. And back then, the user experience on these websites was not the best, because it was built by tech geeks. So we decided, like, hey, wait a minute, we can build a much better user experience, similar P2P marketplace. And we did it. And the proof is that people started to use us, the word came out, and so people started to come over to us, and now we are bigger than this competitor. We are like 4 times bigger. So, and now I see same similarity in the DeFi. Again, it's built by, in the beginning by tech geeks for themselves. It's not really meant for the mass market. So now we're again in this time frame where DeFi is being now mostly for the tech geeks, but it's more becoming more mainstream. But it's going to take time.
I see. Yeah. So do you want to talk a bit about your new project, and then we'll go into some user questions people had submitted about Paxful?
Sure. So look, my DeFi story is an interesting one. I'm sitting on Ethereum since 2016, and it's going up in price. I'm just holding this. And then I hear some stories that, like, hey, you can hold your Ethereum, not sell it. You can borrow against it, stable coins, and you can make on top 20-30%. That was back 2020 spring. And I started to ask, like, first, before asking my friends, I started to research, like, where is this money coming from? And I understood you have to put money into some projects. I'm just explaining how I understood back then. Right now, it's already clear how everything works. But back then, it's like I have to put my stable coins in somewhere that gives me some reward. So I was asking my Ethereum friends back then. I was huge Bitcoin maxi back then, probably because I was super focused with Paxful. And they said, one guy said, well, I don't know, I'm doing this ETH2 staking. Another guy said, well, I don't know, I'm just doing decentralized cross-chain swaps. So I started reading myself, and lots of sleepless nights till like 6-7 a.m. until I figured out, like, oh, it's basically this projects are giving you their tokens and trading fees in return. And then it clicked me like, oh, okay, that's how this works. And I started to like, and because it took me so much time to figure out how this works, it's like, okay, that means the user experience is not there if people like me are asking this kind of questions. So now it's time to build something back. And that's the initial idea, is like, okay, if DeFi is about optimizing yield for you, that means the first project is to have a yield optimizer that basically people could, the big difference is, instead of choosing from many strategies where you can put your money in, where, you know, the more options you have, the harder it is to make a decision. So you don't make people options. It's like, this is it. You put your money here, complete transparency, where this money goes, what's done with your money, what is the return, and there's no like lockup periods or like hidden fees. And that's the idea. So it's a yield optimizer without any decisions or choosing points you have to do with the strategies. This is it, where we put money in. These are the strategies we are having on the background that are earning yield for you. And these are the fees we're taking. It's not out yet, so it's going to be really soon.
Cool. Yeah. So basically, I mean, this is something I run into all the time when I'm trying to create educational content about this, is that most people don't have the time to be risk managing all these strategies themselves, because you have to find the pools, you have to assess the stablecoin risk, the protocol risk, then you have to monitor the yield because it's not going to last forever, and you have to diversify. So basically, you at Clip will be handling that part of it, and then people just deposit.
Exactly. And plus, yeah, it's explaining right now. Obviously, we have other ideas that we want to implement, but for now, I want to keep it MVP level, simple. Here's just one deposit options. That's it. And yeah, here's where the money will go. And like you said, you don't have to track it. Maybe there's some other strategy that is giving you more, but it's up to you. And the risks are also listed there. And we're obviously minimizing and making more conservative yield strategy like decisions.
Great. Yeah. And I will give a disclosure to viewers. I am working with the Clip team on developing some of these strategies. So yeah. I'm involved in that process. Yeah, this is really interesting. I want to take a step back to sort of your journey to get to this point overall. As you were getting into the Bitcoin space, building Paxful, what are some of the challenges that you faced along the way?
I'm
like sure all sorts of things.
From every angle, yeah. Like right now is, you know, when you launch something, the last 5% takes 50% of time. That's one, and after that, the real work starts, right? Then you have to actually get the users. So that's the difference between the founder of and the product guys. Like, hey, you can build some product, but now you have to get their users as well. You have to make something useful people are going to use. This is like one of these challenges. And of course, you need to have the right people, because you obviously can't do it all by yourself. So, and then you gotta two things. You have to watch your competitors and listen to your customers, because if you do what your competitors are doing, then you're always behind. But if you're listening to the customers, what they want, then you're just following your line, right? It's not like you're always behind the competitors, but you're just doing what your customers want. So you always have to find the balance between these two things.
Okay. Yeah. And a lot of people tell me all the time that they want to start a business in crypto space and they don't know where to start. What would you tell people like that?
Well, there's different businesses you can start in crypto. One is related to build something. Then you have to know software development. So 6 months ago, I didn't know how to do smart contracts. Well, luckily, I got some start because some of my friends know smart contracts really well, and they dived with me, explained me how they work. Well, obviously, I did read as well, and plus I have a tech background. That's one. And if you want to do some copy, well, right now in crypto, this is interesting. You can copy existing project, you can fork some project to DEX or money market on some new chain, and you don't have to build something unique, probably just a unique UI. Because in traditional, the Web2 world, you can't really fork a project, and probably people will not use this if you make an identical, Gmail or something like this. In DeFi, it is like that. Obviously, have to add some like tokenomics and all that stuff. And then others like non-development stuff you can recommend too, right? You start doing educational content, getting community around you, so unrelated to like development, smart contract development. So there's a lot of avenues. I actually done a presentation like 3 years ago. What the ways you can make money in crypto. Yeah, you can always speculate. You can yield farm. You need to have some capital for it. Then you can buy, sell, do like OTC fiat arbitrage. That's what Paxful for. Is basically you sell on Paxful with one payment method, like plus 5% above market price. Then you have your way to buy it at the market price, Bitcoin back, and then you just go in circles. So there are ways.
Awesome. Let's get into a few questions from viewers now before we go any further. So one question was, given your experience with Bitcoin payments, a lot of Western countries are in a race to integrate Lightning Network payment options. What advice would you give to an entrepreneur who had the goal of onboarding retailers to the Lightning Network?
Okay, it's a good question. So first thing is you have to know what is Lightning Network, how this works. Lightning Network is layer 2 on top of Bitcoin, which means technically you lock your Bitcoin on layer 2, and then you open a channel with somebody who also locked his Bitcoin on layer 2. And then the payments are instant between each other on chain on layer 2. And this is in a trustless way. Basically, the channel I close, then I get my money back. So that's in short the technical way. And because they are instant payments between all the people who open channels between each other, you can do instant payments. But here's one thing, because the payments are done in Bitcoin, well, layer 2 Bitcoin, this is volatile. So every time like I do a payment to you instantly, we're in different parts of the world, you need to hedge it. You need to hedge your Bitcoin, probably into a stable coin. And that's why, in my opinion, again, Lightning will be invisible for the retail. They're not even sure that they're using Lightning, because if we just want to do a payment like friends, who are into crypto, share like a dinner, I mean the bill of the dinner, and we are all crypto people, I tell you like, hey, I paid with my credit card, and your part is like $100. Like send me in stable coins on whatever EVM network, or send me $100 in Bitcoin or Lightning, and I get it in that. But for the retail, it's gonna grow massively. It's gonna replace Swift eventually. So the local payment networks will be talking to each other. It's like transfer-wise, with the banks in each region are doing the balancing with each other. Same thing is going to be here. Lightning Network payments, because it's the value that is moving around in a trustless way, will be moving between payment networks in different countries. That's how it's going to work. And then the retail can tap into that, accept it. But again, I'm just thinking now that retail will not know that they're using Lightning, but it's going to be used as a transfer layer. That's how I would explain it. Yeah.
Could you see that being used as a transfer layer for people who did not know they were transferring Bitcoin, or do you mean for people who are sending Bitcoin to each other?
Yeah, exactly. People who don't know that even they're using Bitcoin on layer 2, it's going to be invisible for them. It's look, a good example probably is like you're using a credit card, you don't know what's there underneath. There's like acquire bank, and like who's how many moving pieces are there. Here's going to be something similar. It just works, and it's instant. I think you've seen even videos where one guy is paying with a credit card, in the store and another guy is paying with the Lightning Network, where the credit card payment takes 5 seconds to say like, hey, payment's received. With Lightning Network, it's 1 second. So that's already faster. And yeah, there's a look, some people can argue with me, not Bitcoin maxis who are more into Ethereum, both that, hey, no, it's going to be stable coins. It's going to be on the Ethereum blockchain or some other L2 blockchain. The stable coins will be a means of payment. Yes, I agree that too. But this Bitcoin layer 2 Lightning gives more security in that trustlessness and immutability and permissionless and censorship resistance, because you just heard this, the USDC and Tornado Cash story. So, but Lightning will give you the censorship resistance confidence.
Yeah, and that's
it's a topic we can always speculate, argue, and like everybody has their own like vision, idea how it may work in the future. They will all coexist, stable coins, the traditional payment network, because it all depends now. The Lightning depends about tapping into local payment networks of every country, every region, that the banks themselves, central banks, they have to be okay with that. Well, eventually they will be, once they see value in that, the speed and effectiveness, because again, the commerce is done. The faster you do payments, the faster you do the commerce, because when money is stuck, bank is asking like, hey, where is this $1,000 from your friend? What is this for? And then my money's stuck for 2 days until I answer this. It's not really efficient.
Yeah, I also feel like the neutrality of it is starting to appeal to people, because we saw with geopolitical events certain countries being sanctioned or taken off SWIFT. And if you were a small country and you were using Bitcoin Lightning Network to settle things, then you wouldn't have to worry about that so much.
Exactly.
Great. One other question that came from the audience is, do you know of any payment rails in development that would allow spending directly from wallets so that people could get off of fiat entirely?
Well, yeah. So the first thing is that you can get into stable coins. It's what's right now USDC, USDT, that are fiat backed. You can have an algorithmic stable coins like Frax and Rye. That's one thing. And your value, your money is tied to the dollar value, so it's not fluctuating. If you would be holding Ethereum or if you would be holding Bitcoin, of course you can hold Bitcoin and Ethereum. Like that's what I personally do. So one cool thing, when I met Michael Saylor, he explained this thing that Robert Kiyosaki is explaining, that you can live in debt, which means you borrow against appreciating asset, which is Bitcoin and Ethereum, and you pay 3% yearly interest rate, while your asset, Bitcoin, Ethereum, appreciates 2x every year. So basically, because your asset that is collateral is appreciating more, you can always borrow more against it. Obviously, you have to do a risk management when it falls. Like now, it fell 60-70% from all-time high. You need to have enough collateral to cover this and the interest payment. That's another interesting concept that people should be aware of, especially that's in yield farming. That's what I'm using. So I'm not selling Ethereum. I'm borrowing stable coins against it at the 3% rate, and then I'm farming with the 10% rate. So my net profit in farming is 7%, and I don't have a capital gains because I haven't sold my Ethereum. I just paid back.
Yeah,
you probably knows what I'm talking about.
Yeah, I think the audience probably has. That's probably sounding pretty familiar to them, and the tax benefits are definitely something that's appealing to a lot of people. And honestly, I mean, one of the benefits of DeFi is that sort of quick borrowing without having to go through a lot of paperwork is much more difficult to do against traditional assets.
Oh yeah. So we're in the super beginning. Like I'm getting calls from my friends, or like in the real estate, they're saying about all these things, like in loan refinancing, that like, hey, I can refinance my mortgage from another bank, but in traditional finance, it's a lot of paperwork, have to move the money. But imagine if this was on DeFi, and if some protocol offers better interest rates, you can just do with one click flash loan to other protocol. Like, it's going to happen. If there are this kind of ideas, it's going to happen sooner or later. And then I have this other not hardcore crypto people who are, like tourists. They came to make quick money. Now is bear market. Like, oh, is DeFi done? Like, what's going to happen now? Like, the yields are down, and is it the end? I'm like, no, it's not, because for me, fundamentally, the yields should be bigger than traditional finance, because the infrastructure in traditional finance is a lot more expensive to maintain than decentralized infrastructure in DeFi. That's one thing. So that's why the yields will be always bigger in traditional finance in DeFi, and that's why this is here to stay. Again, obviously, if the interest rates in real life would go to the 10%, right? So then the treasury will offer you a really good yield on the dollar holdings, but that's a different story. But in general, it's because of the infrastructure costs, DeFi can offer you cheaper and faster services. And the second thing is, another interesting concept in DeFi is the settlement time is one block, let's say 13 seconds. In traditional finance is T+3 days. And because of this quick settlement time, you can do like money movements much faster. And then another one is the flash loan concept, that you can try to do a transaction in DeFi on blockchain. If it fails, everything rolls back. If it's successful, then it's cool. Like you made your money, or you did there's something, and that's especially useful in flash loans. And I'm explaining that concept to my friends from Goldman Sachs, who worked there back in 2000s. They're like, oh, it's all just repeating itself. It's a yes and no. Again, some concepts are like not possible to implement in traditional finance.
Mm-hmm. Yeah, well, I keep thinking of this interview I saw with Jeff Bezos from the mid 90s, and he talked about how at the time, most things you could do on the internet, you could also do in person. And he talked about he chose books because it was possible to have a book retailer online that you couldn't do in person. I feel like it's probably a similar thing with DeFi, where yes, a lot of things you do in DeFi, you could also do in traditional finance, but we're getting to use cases that would be impossible. And probably 5-10 years down the line, there's going to be financial products through DeFi that would in no way be possible in the traditional world.
Exactly. That's what I'm seeing myself too. Yeah.
Cool. So let's talk a little more about Clip before we wrap this up, since that is your current project.
Yeah.
So one thing I think that some people will have questions about is, we saw certain stablecoin farming operations like CeFi, like Celsius, and then we had the algorithmic stablecoins with Anchor, where people lost their funds. As you were designing Clip, how are you setting it up to avoid that sort of situation?
Yeah, so that's a good question. That's the risk management question, and the people would have that question right away, because again, we need to gain trust of users. Like, how do we gain trust? The first is whatever we offer them, like, hey, the APY is 11%, and there are a lot of scams on the internet that are offering you make quick money. So this is simple way. It's not just the future promise. We can show historical graph how much APY people were making, and then compared to the CeFi, we will have a full transparency. The APY, where is it coming from? How is the money allocated? So people may not understand this, but at least they see like, okay, we actually try to show what we're doing, because in Celsius, what they did, right? They did this STETH leverage lending on Aave or something, but they didn't explain that. So they were actually trading against the collateral. But we're not looking to trade, because there's a speculation risk. And the second is about not not basically investing into too good to be true, right? There's you gotta stay conservative, and the Luna UST's example kind of proved that stable coins are now risky, so it's better to avoid them. That's it. That just you can. We will have a simple rules like do not invest more than 20% of the TVL of that project, or do not invest into stable coin. I mean, algorithmic stable coins. Then when there's a DPEG happening of a stable coin like USDT, then get out. This kind of simple, like written in stone rules that are not vague but are super specific.
Great. And we are recording this for people watching on August 11th. Do you have any preview on when some of these features might be available to the public?
Oh, end of August.
End of August.
Ready for the end of August, yeah.
Great. So a few weeks. And then, this has been a great interview. Looking forward to the next few years in DeFi. Where do you see this industry moving?
The TVL will grow definitely. And again, it's a complexity that is not getting the new money here, the institutional money, because they're used to. There's probably the regulations too. This stablecoin regulations are not there, so it's basically still a niche, but it's gonna get more and more mainstream. And again, I think it's gonna be it's gonna be invisible for the end users. That's where the DeFi and the blockchains will really work, when we wouldn't even know with you that we're using blockchain.
Yeah, just like people don't know now if a website's in PHP or JavaScript or what's happening with the server.
Why should you know? It just works.
Phenomenal. Well, it's been great having you on the show, Artur. I'm looking forward to Clip. And like I told people in full disclosure, I've been working with the Clip team as well. And I hope to talk again soon.
Awesome. Thank you.